Well, I've just returned from 2 weeks in the US, where I visited a whole range of our clients, plus a number of government officials. The main theme there has been the about face from the Federal Reserve. Back in November, December, the Fed said that they were a long way away from their so-called neutral level, so markets were anticipating 2 to 3 further increases by the Federal Reserve in the rates. But back in December, after the share market had its huge correction, the Fed changed its tune, and the general expectation is that the share market has a major impact on Fed thinking. Other factors that would have affected their thinking were around the US shutdown, the trade talks between the US and China, and of course general concerns about global growth. So now the market is not expecting any more rate hikes from the Federal Reserve. My view is that that's probably a little bit overly optimistic. I feel that the US economy didn't change that quickly, but the Fed will take some time to rebuild a case to raise rates. So we're looking much more further out into 2019 before we would expect to see a move. They're also very interested in the situation in Australia, and these international investors, of course, have always focused on the housing market in Australia, and the weakness that we've seen in the housing market over the last 12 months is starting to impact their thinking. We saw that from the Reserve Bank as well, and of course the Reserve Bank went from a position of what I would call a tightening bias, where the next move in rates was up, to saying that the next move in rates could be up or down. A lot of that was due to the weakness in the economy associated with the falling house prices in Sydney and Melbourne, and the spillover that had to the Australian consumer. We saw the minutes from the Reserve Bank where they specifically said that the outlook was going to be very dependent upon further movements in house prices. If house prices continue to fall, then the implication is that consumer spending would be even weaker, that house building would be even weaker, and the Reserve Bank would have to further lower its growth and employment forecasts.